Okay, so we're back and we are going to do how we are going to approach the market, right? Well, I'm going to show you how I approach the market. Once again, I have to say this disclaimer. I am not a professional finance advisor. Trading is taking risk, and if you are taking a risk, you're doing so on at your own risk. Okay, I am not telling you what to trade, how to trade, or anything like that. Now we got that out of the way, let's begin. So we're on a higher time frame, the daily, and we just recently took liquidity up here, and we are currently going up right now. So we are in an upward trend, right? Okay. So now that we have that down, we are going to go in a smaller time frame. So this is the 4 hour time frame. All right. So what we have so far is a clear market structure shift, right? We have a clear market structure shift, which happened here. And it also happened up here on a smaller scale on an hour time frame, right? Mark that out. Always mark out the market structure shifts. Anything that you see, basically, you want to mark it out, right? So we see that there. Now, because of this shift, we're going to go down in a smaller time frame and see where what caused the shift. Well, we have liquidity here, and now we want to see what candle is responsible for that. So you look right here, this candle here is responsible for that high to get ran. That right there looks like a nice breaker. So we have a fair value gap here and a fair value gap here. This looks like a breakaway gap, and this looks like a fair value gap. So what I tend to do is mark out the area of interest, and I do that by taking this box and going to this fair value gap here, which was there, and I mark that out as a FVG, and then we have also market structure shift, and then the order block is here. This is the candle responsible for this run up. All right. All right. So now we know you could wait for the time, and this was in London session. And I would say at 2 o'clock, this happened. This candle starts at 2 o'clock. and made its way lower. So in this area, I would actually have marked it out here and place the stop loss up here. That's a big risk. And go to the next following low, which is here. All these lows. So, and the trade would have been not that simple because, we would have been in drawdown for a little bit, but if we was to see this on the hour time frame, we would have been able to get in on this trade during London, and during New York it kind of continued and consolidated. Right? All right. Let's look at another example. Let's just, you know what, we can, because it happens. It happens. Uh, let's do buying example. Okay, here. Let's go to the 15-minute time frame and see what we see down here. Worry, man, it doesn't matter. Basically, New York and London, it does the same thing. Okay, right here, if we zoom in, let me see if we're still recording. Yeah, we are. Okay, good. Right here, if we zoom in, we had this clean breaker structure here during New York. Oh, you know what? This is how we can catch multiple. During London, 3:15 started. The 12 a.m. candle is right here. So we'll just draw that out for reference, right? If we're above the 12 a.m. candle, the opening, we want to sell. If we are below it, we want to buy. So here we were above. Market structure shift happened. We returned to the order block at 4:15, and we started selling towards the lows. Right? We took out these lows. Judas swing. And now, since we're below the market open, we want to look for buys. And right here, we had a clean breaker structure. We turned to the order block, which is here, and rallied up to this high, taking the highs. Only thing when I only thing that I do is look for the market structure shift. When it comes to the time and the day, that's what I use now. I use the time and I use the price. I'm sorry, I said day. Time and then price. So at the time, at that specific time, I will look for a move. But using the 12 a.m. candle, I will mark out where I would want to see price head to. And you could kind of tell also by the Asia range, but I'm not going to get into that until later on. But from what I see, you take the opening of the midnight candle, draw it across for the day, and if price reaches above during the kill zone time, I'm going to sell it once I see a break of structure. Once I see a break of structure, I'm waiting for it to retrace back to the order block, which it did, and break down to the lows. Once it gets to those lows, I'm gonna wait for another sign of a break of structure. Once it gets in at what it was 8:30 on the dot, New York Open, it price shoots up, breaks structure, returns back to the order block, which it did, and rallied up. Rallied up, and to take all these highs right here, and it does it every day. Every day it does it. So here we go again. 12 a.m. open. The market came, just went right above at 2:30. At 2:30, market went right above, then broke structure going down, and then at 4 o'clock on the dot, it returned to the order block. Yeah, like yeah, right here. Turned to the order block, rode it to the lows. This the low from the previous session, which was London, and then New York. We have a break of structure going up. London close gave us a return to the order block that it formed to go lower, taking this low. When the candles are consecutive, that creates the order block and rallies up to this high right here. And towards the end of the day, it took the high. So obviously, uh, either right here or right here. So we would have been in and out of those two trades. And if we held, wow, look at that. During Asia, it continued to these highs here. It's crazy. All right, so that's the approach that I'm taking every time. And this is British pound AU Aussie, GBP AUD. So imagine on the New York pairs. I'm showing you that it can happen on any pair. All right. So we're gonna conclude this session and continue on to another session.